Soloway was on the Crypto Banter show today. I am going to give a reaction to what he says in terms of his analysis for Bitcoin and the stock markets, etc. I am a chartist myself. Gareth is a very experienced one. He's been doing it over 25 years. And so I'm going to react to say what I think about his analysis. And let's get started. Be sure to hit that subscribe button. All right, so let's hear what he's got to say.
$25,000 level. Gareth, welcome back, buddy.
Hey, great to be back, Rand. Thanks for having me.
Gareth, I want to play you something from the last time you were here, if you'll allow me. Okay, so let's test this and just hope that it works.
Okay, so he's going to show what
that we're still in a bear market in crypto until we see something else. So again, 25K would be a very pivotal level. That's where I've said I would start shorting Bitcoin if it gets up there. With my members, I have a long on Bitcoin we're still holding. That would be where I would exit that and flip it into a short.
When would you? That's what you said last time you were here. You said when Bitcoin gets to 25,000, you would flip your long into a short. Bitcoin has tested that 25,000 level multiple times. Are you a man of your word? Are you a man of your word? Are you going to flip your long into shorts, or are you going to keep on riding this beautiful, juicy bull market?
So the answer is yes. I'm going to end up doing that. I haven't done it yet. I keep on thinking it's going to get to about 25, 3 to 25.
So he's still sticking to that apparently. Apparently he still says 25,000 is an area that he's turning into from longs into shorts. So, Rand didn't exactly catch him on anything. Again, I can't wait to see Gareth's analysis. Stay on here. We're going to go through it together. Don't go anywhere now. Hit that subscribe button.
And so I haven't been able to get filled on the exit yet. But the answer is yes, and I've also been alerting members to unload and start shorting different things. We shorted some Avalanche over the weekend. We started kind of dipping our toes on the short side. So the key is this, is like, listen, could we break through? And you're right, by the way. You were saying, when we're hitting 25,000, are we chipping away at that? The answer is yes. But it's also right to say that you still have a wall in front of you, which is 25, that we haven't broken yet. So the question is, which one does it turn out to be? Does it turn out to be the breakout where we can get to 30,000, which is the next major level, or does it stall here and it's unable to break through this epic 25,000 level?
So you said you're short at 25.2 or 25.3, whatever that level is. What would invalidate that for you? Because, if I understand correctly, you're going to, as soon as it's 25 to a 25,
good question, Rand.
You're going to hit your orders, you're going to hit your shorts. What would invalidate that for you? Where would you put a stop loss? Where would you say, hold on a second, we're actually going up to if I look at my chart, and my chart's obviously not as good as your chart, but for me, once we break this 25,000 level over here, I don't see much resistance until 30,000. You can say it's
28 to 32.
You can say
it's true.
32,000, but there's not much resistance until that point.
No, that's exactly what my chart shows too.
He's not showing his volume though.
So that's exactly the line I have. And what you can see here is
Rand's not showing it, but yes, the volume indicator, at least the ones that I use, show that there's not a whole lot of volume to stop price from shooting up to somewhere between, if it can really get above 25, then 28 to 32 is very much in the cards. You can tell by the lack of volume in that area to stop it. That's what they were saying.
When we were in the bull market of 2021, it was the pivot low here, all this choppy kind of mid bull market lows, and then here's where we kind of went sideways and broke down. So if we did break through 25,000 and I do get filled on my short and I exit my long, then that's exactly what I'm going to be looking for. If we get above 30,000, then I actually would have to probably switch my narrative if we stay above 30,000, that the low is finally in on Bitcoin.
Did you hear that? So he's saying that if Bitcoin goes above 30,000 and can stay above that, then the low is probably in, and he will change his tune, saying that, well, the low is in, and that will be him saying, I don't think we're going to hit this 13,000, 10,000, whatever numbers he anticipates. And I would agree with that.
This cycle. So again, right now I'm not a believer that the low is in just yet, but if we got above and stayed, and this is the key, it can't just be one day where it pops above. You need to see it establish itself above 30,000. If it does that, then I think you have to start talking about that we are in
probably at least a couple weeks, not a month.
Bullish market.
Okay, hold on. Explain this trade to me. So you go short at 25,200. You go short at 25,300. You ride the short up until 30,000 if it gets invalidated. But that means you're riding it up till 32,000. That's a $5,000 move. which means that you probably have the same. You're probably expecting a bigger move than the $5,000 to the downside if you were taking that trade, right?
Correct. So
Okay.
for the chart, if we can, you can see the channel that we're in too, right? So not only is it that flat.
So what Rand's asking him there is, well, do you expect a greater, if Bitcoin breaks down and goes down and your short is good, do you expect Bitcoin to go down more than 5,000? Which means, do you expect Bitcoin to go back under 20,000? So that's what Gareth's answering right now.
Up at around 25,000, but we also have this upsloping kind of channel that we're in, and we're hitting the high end of that, right? So if we come down and if we can take out 22,000 to the downside, you have no major support until you get down to about 18,003 to 400. So that gives you
18,000.
at least about 7,000 on the downside before you hit major support, and that's assuming that we don't break that at some point and start heading back to the lows on the chart.
Interesting.
Okay, how do you see the S&P? Because in the last time we spoke, there was a very, very, very small chance of a...
It's true. You got to look at the stock market. You have to look at the greater financial asset bodies like the stock market and the real estate market, because how those things move and what happens to them has an effect on, as a ripple effect, on the rest of the financial market, including crypto, no doubt, because crypto is just a little sliver in this great, like, quadrillion-dollar financial market. Crypto is like 1 trillion out of like a quadrillion if you include derivatives, which I think you should. So what's the S&P going to do? That's what he's going to look at now.
50 basis point rate hike in March. It was less than 1%. Now when I look at the chances of a 50 basis point rate hike in March, it's gone up to 21%.
Did you hear that? So now the probabilities of a 50 basis point hike in March by the Fed is gone up to 21%. Let's be clear on this. There was basically a 0% chance just a week or two ago. As a matter of fact, most people thought the consensus was that there would just be one, maybe 2 more 25 basis point hikes. Now we're sitting here talking about a 50 just in March. And I expect that 21% number to keep rising, which means stock market will go down, Dixie will go up. Let's hear what Gareth has to say.
On Friday, we've got the PCE numbers, the PCE inflation numbers, which is the measure that the Fed actually look at when they measure inflation. Yep. And a lot of people think that we may get a disappointing PCE number because we're a disappointing CPI number. How does this all play into the US market?
Yeah, so with the U.S. markets, the markets are on very shaky ground. We've been seeing those interest rates creep up. The 10-year started to move up. That's pushing markets down. The S&P's been kind of falling. We're setting up for another big down day today, at least at the start. So again, what I would look for is, number one, is psychologically the market's preparing for a bad number. When people prepare for something bad, it usually means that even if the number comes in bad, everyone's already ready for it. Right, so it gives the possibility that it can be better than expected and create a little bit of a rally. Having said that, the mid to long term on this market on the S&P is still unbelievably negative. Yeah. And again, if you look at the weekly, the monthly charts, we're still in a nasty bear market, and I do think that we do see recession by second half of 2023.
I agree.
Okay, help me understand this. So I agree with you regarding the S&P. I agree with you regarding, I looked at the US 10-year. You can see that the US 10-year is starting to creep up. Thing is, I also looked at the European markets. So I looked at the FTSE and I looked at the Copenhagen Exchange. Just take me to the FTSE. Just humor me for a second.
What's that look like? I think it has new all-time highs.
So the FTSE 100 is probably a good one to look at.
Looks like it.
Just zoom out for me.
Yeah.
Okay.
The FTSE 100 is at all-time highs.
Yeah.
It's at all-time highs. I'll give it another market.
But it didn't make all-time highs in the
ASX,
actual
the
bull market either, which is weird.
That's not that's ASX Limited, but there is the ASX. I think it's the ASX 2 or whatever. So
but relevant point.
Also at all-time highs.
It's a factor to look at.
The Aussie Stock Exchange is also at all-time highs.
Now the Aussie one.
All-time highs. The French, the CAC 40, the CAC 40 is at all-time highs.
Basically.
How do you reconcile that against the US market, which is not at all-time highs yet? To me, it may mean that the US market's got some catching up to do.
Yeah, you could take it that way, or you could take it a different way. Like think about this, right? If we look at like the Brazilian market, the EWZ, and you look at this comparatively to the U.S. markets, what is this telling us, right? And if we look at, let's go to the monthly chart of the EWZ. Look at this is the monthly chart. The last time you were at an all-time high on the Brazilian
like
market
15
was
years
in
of down.
2008, and look at how far away it is. So for me, this isn't what.
That goes all the way back. That high back there was like in 2008. So it's like 15 years of a lower highs being made. And if you look at that formation there, you see that trend line Gareth drew on the top. If you look at the bottom where he didn't draw a line, you can see that where the lows are forms a base, like a straight line. That looks like a big, gigantic descending triangle to me. So I would guess that thing, more often than not, a descending triangle will go down. It could go up, but it looks like it's coming to a threshold pressure point at the end of that triangle, and it's going to bust up or down. They usually break down. Could it bust up? Yeah, but it's going to be breaking out one way or another, up or down, pretty soon. So if you trade Brazil, watch out for that.
Tells me it's a rotation of capital. So since COVID, during COVID, even since 2009, we saw money flow just rushing into the U.S. The U.S. was the place to be.
Yeah.
I think money is starting to recognize
Usually
the
is.
Fed's no longer a dove, and likely won't be becoming a dove again anytime soon. And what that means is the markets and investors are now looking for other areas to invest in outside of the U.S. And if you look at Europe, for instance, what they're going through with the natural gas problems and all of the different issues due to their economic woes from Russia, you probably are now looking at maybe opportunities there. So money's flowing there. Money's going to flow to China. Money flows to Brazil. I think the U.S. markets are going to end up lagging, and I ultimately think you'll see that lag continue.
Okay, let's look at one last chart.
So does that mean
Let's
for
look
crypto?
actually two charts. Let's look at the Dixie. So the Dixie was behaving itself. Now back above 104. If I remember correctly, before the show I looked at it, was back above 104. Let's look at that.
Dixie's making moves.
Yeah, so check
As
this
it
out.
should
So
be.
this is a beautiful chart because it told us that the dollar was going to start to rise. Number one, we fell into major support right here. And also, if we go to your weekly chart, you can see this trend line to here and connected through this little low
Love
here.
these trend
And
lines.
it gave us exactly the low on the Dixie. Then what's even more beautiful, we got the 3-bar surge with a bull flag, right? So that told us that we were going to have a breakout, and the breakout is in motion. I had the Dixie going up to 105.50 before we hit major resistance. So there's more upside in the dollar.
If you zoom out a bit and you go bigger time frame, do you see the Dixie going back down to under 95, 96, or do you see the dollar going back up to around the 114 area? What would be your prediction if you looked at the charts?
Neither in the short.
Prediction-wise, I'm in the camp that the dollar topped when you had basically this high here. So I don't think, I would be somewhat surprised to see us make a new high on the dollar. I think that the U.S. is going to be in kind of a long-term recession once it hits it. I don't think it's going to be a depression, but I think you're going to see this market and this economy that's stuck in this long-term kind of market where it just continues to be unable to get out of it because the Fed is unable, because of inflation remaining somewhat on the higher side, to print us out. So it's going to be like a shallow recession, but it's going to basically put us at a disadvantage compared to the rest of the world. I think you see a lot of the other global economies starting to lean on the U.S. over the next 5-10 years.
So you last time came on the show, I asked you what your best trade for 2023 is. You said your best trade for 2023 would be gold.
Yep.
Still hold that thesis?
I do. Well, and remember, that's compared to the S&P as well as the Bitcoin.
Thing.
So we're not talking about like small caps or whatever like that. Strictly those between those assets. I think gold is the place to be for two reasons. Number one, I do think it'll outperform percentage-wise, but also for safety, right? So at any one point, we have to see what the regulation is in crypto. We don't know what that's going to be. We've heard all these crazy things like Kraken getting sued and having to settle with the SEC and all this stuff. We don't know there. That's risky for me. The stock market, to me, if we're going to see a recession in the second half, that's going to be very, very bearish. Remember, when the Fed tends to stop hiking, historically, it actually is this trigger for a bigger market sell-off. Yeah. And what that usually tells us is that the economy is getting really bad. That's why we're seeing the sell-off. So I still think gold's the place to be. Let's make sure we check in on a monthly or weekly basis to see if I'm correct.
You know we will.
Overall, I don't really have much else to say. Gareth has a pretty good analysis there, and I think I overall agree with it. I think 30,000 for Bitcoin. If it goes above that and holds it for a couple weeks on closing basis, then I think the bottom is definitely in. Although we could come back down much lower, but I think the bottom is in. And as for the S&P 500, the stock market, etc., it really has a lot to do with what's going to go on with the economy. Because like I was saying, China, Japan, and the Treasury are putting a bunch of liquidity into the global economy, macro environment right now. And that's creating money to go into assets. So it's kind of a risk-on environment. But that seems to be temporary because the Fed, things have gotten more hawkish, right? More on the war path to fight inflation because the January inflation number came back not good, and also the manufacturers' inflation number came back not good. The employment number was really high, which is good, but it's not good for what the Fed's trying to do. So it all leans towards the Fed staying higher for longer, right, with their interest rates, and possibly raising their interest rates higher. And right now, as Rand was showing on there, that there was about a 2% chance a couple weeks ago that the Fed was going to do a 50 basis point hike. And now it's about a 21% chance that the Fed's going to do a 50% basis point hike in March. So all those things will push up the dollar and bring down risk assets. And of course, we still have the recession around the corner, most likely, and the housing market nationwide probably going to be on a year-over-year decrease, which all of these things lining up, it doesn't look like a bullish 2023. I think I agree with Gareth. I can't think of what I disagree with Gareth on. I really can't. It all sounded pretty good, and he's one of the best. So take all that in mind, not financial advice. You do you, boo. Hit that subscribe button. You're awesome.